The market's well and truly up and running now this year. Of course, January is a slow start to the year because we don't have a lot of action happening, but we've certainly got a lot of action happening in February. So we're starting to get a real clear sense of the direction of the markets. And certainly markets have picked up exactly where they've left off at the end of last year. So there hasn't been a pause, there hasn't been a moderation in buyer activity. In fact, we have signs that in some markets that buyer activity and seller activity is actually intensifying. So a very strong start to the year in Sydney, a very solid start to the year in Melbourne. Perhaps surprised on the upside a little bit Melbourne, but certainly that Melbourne market is proving to be quite robust. But the Sydney market really is just keeps on keeping on. The auction market in Sydney in February, the clearance rate over February was the highest ever recorded for a February, and it was the third highest on record for a monthly clearance rate, just behind September last year, which was the record clearance rate for Sydney. So no sign of an easing in the housing market in Sydney. Clearance rates, we've had 6 consecutive weekend clearance rates above 80% in Sydney to start the year, which is extraordinary and certainly unprecedented. A lot of anecdotal evidence about reserves being exceeded by 10 to 15%. So certainly there's a lot of competition still for properties in Sydney at the moment. And some of the interesting trends that we're seeing emerge in Sydney are the prestige market. Certainly we're starting to see more listings coming through from the prestige ends of the market, which has been a little quiet over the last few years. And I guess it's been the laggard in the general uptrend of housing market activity in Sydney over the last 12 months. But starting to catch up now, and we are starting to see those prestige sellers and maybe prestige buyers starting to get back into the marketplace. Well, of course, no surprise that Brisbane's getting on the radar of investors. Plus 5% yields, plenty of upside for growth in terms of capital growth. The Brisbane house prices are still just below where they were in 2010, so there's some upside there for growth, and I expect the median house price in Brisbane to reach its peak level around about mid-year this year. A lot of activity in the mid-price section market in Brisbane, and houses in particular in those suburbs swinging from the north all around to the southwest. It's a tight rental market in Brisbane. Rents continue to rise, low vacancy rates, and certainly a solid potential for growth. So yes, Brisbane's certainly on the radar for investors, and I expect that to be a key part of the market this year in Brisbane. For houses, not so much for units. There's still a sense of an oversupply, particularly of new units in that Brisbane market. But certainly houses are a very good prospect for investors, and I think we're seeing them voting with their wallets in that respect at the moment. Well, generally we're actually starting to see an easing in rental markets. We're starting to see vacancy rates climb generally in some markets. And of course that's no surprise because we do have two things operating. We have a lot of buyers moving into the market. Certainly first home buyer numbers are low in Sydney and Melbourne and Brisbane. No surprise because of the changes to the grants over the last couple of years drew forward a lot of demand. So we've got a lower demand now, but we are starting to see those first home buyer numbers rise. Now the other thing that's and of course more buyers means people are going out of the rental market into the buying market. Now the other thing that's easing rental markets is a surge in investor activity. We're seeing a very significant increase in supply of rental properties, particularly in Sydney. And of course that means more supply, so that eases pressure on rental growth, pushes up vacancy rates, and we're seeing yields fall as well. So generally rental markets are a better prospect for tenants at the moment. So it's about that balancing effect. We've got a wave forward of investor activity, increased supply, puts downward pressure on rents, upward movement of vacancy rates, downward movement on yields. So therefore, it swings a little bit more in favour of the tenant than the investor. But certainly that's what's to be expected. We have such a strong market activity, particularly in Sydney at the moment, and such strong investor activity. So perhaps some better news for tenants there. Property investment at the moment is a buzz, and it's a buzz because prices are rising strongly, this is what we see naturally in these uplift periods of the housing market. And look, I expect growth to moderate over time, particularly as as prices continue to rise quicker than incomes are rising. And look, that's the key at the moment, is that interest rates have fallen, that incomes have continued to rise, therefore repayments have fallen as a proportion of incomes. That means buyers have been able to buy more, get more bang for their buck, and that's why we're seeing prices rise. And there's always enthusiasm for Australian property.